Good morning, friends and fellow traders. This is Doug Campbell with Right Way Options, and this is the morning market preparation video for March 29th, 2018, the last trading day of the quarter. As we wind down this quarter, it's fairly common to kind of reflect on what this quarter has become. We have gone through quite the turmoil this quarter with the Dow covering basically a 10-12% range as that selling came in and shook off that first month huge rally in the market. So as we wind down this quarter, what can we expect? Well, typically, you would see ahead of a 3-day weekend, you would see volumes start to drop fairly quickly after the morning pop, and then just a lot of choppy price action throughout the rest of the day. However, with nerves kind of being frayed, I don't think we want to go into this weekend assuming that we're going to get the typical price action. We could easily see nervous investors, traders decide that they're just not going to hold through the weekend, and some additional selling could come into the market. So be prepared, watch that price action, and have a plan for that if that does occur. On the other hand, we could see, the lighter volumes out there really get those bulls inspired to relieve some of the pressure, bouncing off the 200-day moving averages here in the diamonds and the SPY, kind of bouncing out of that support range, providing a little relief. Now we're getting a little bit of a pop this morning. As you can see, the futures markets are up currently. We do have some big economic data coming out this morning. We'll talk about that in just a second, but nothing is on there that would suggest, at least at this point, that we're going to see some bad news there. So you can see we're gapping up this morning. Right now, the diamonds or the Dow is showing about a 90-point gap up, and that's been slightly climbing this morning during the pre-market session. So at least we're getting a bullish bump here in the morning. Can they add to that? That'll be the question. Keep in mind that all we did yesterday, and here's the challenge and also the frustration that we all experience. If we look at a short-term chart here on the Dow, here's a 15-minute chart on the diamonds. You can see all we really did yesterday is this really wide range chop. The actual Dow, that was over 350 points in range yesterday, just chopping back and forth. So it's frustrating, very challenging, and wouldn't be all that much of a surprise to see that continue today. However, if those bulls do get inspired, we could see that last day of the quarter little rally, or if those nervous investors, just don't want to hold anything into the long weekend, we could see some of those sellers come in. So be prepared for anything today, I guess is what I'm saying. Just have a plan. Try to avoid your bias on what you think should happen, and just prepare. Be watchful of that price action and react to that price action as you see it. As for me, I don't expect to be adding any new risk heading into the weekend, but I don't have an overwhelming fear at this point either, since we're down here around the 200-day moving average on the diamonds and the SPY. We'll just have to wait, watch, and see how the overall market reacts. Let's take a quick look at the VIX. One concern that I would have is, even though we were in this choppy range yesterday, the VIX actually eked out a little bit of an increase here. Some of that fear is still here in the market, and notice we're not giving up this little trend just as yet on the VIX. So kind of keep in mind that fear is out there. That can create some big emotional reactions, and it is a possibility ahead of the 3-day weekend, we could see some of that emotion spill out one direction or the other. So be prepared for that and be cautious. Let's also take a look at T21. Whoops. T21.22, which is the 4-week new high, new low ratio. You can see in this, I plot this with just a line chart, and you can see very consistent on how it plots. We have a bullish reversal zone, a bearish reversal zone up here when we climb up. And you can see we're down here in this bullish reversal zone, that area where we really could start seeing those bulls step in and maybe push a little bit. Question is whether there'll be enough energy and enough volume ahead of a 3-day weekend to make that occur, or if we just kind of chop sideways. So kind of watch that closely today. On the economic calendar, we have jobless claims coming in at 8:30. They're expected to actually decline a little bit today, as those labor numbers continue to remain extremely strong. Personal income and outlays. Personal income, I think, is expected to tick up this on this reading, and the Chicago PMI. Nothing is expected out of the norm on the Chicago PMI or the consumer sentiment. Everything seems to be holding up quite well as far as economic indicators go. So as long as this market continues to remain, nervous and choppy, we shouldn't get a lot of influence here one way or another from these economic indicators. We'll wait and see, but overall the economy is holding up really, really well and looking pretty good, which bodes well for the future. Perhaps maybe second quarter we get some rally going. Once we kind of move into second quarter earnings, it might inspire that market to move higher. So kind of keep that in the back of your mind as you plan forward. Let's also keep in mind that we have somewhere around just short of 90 companies reporting earnings today. I don't think there's really anything in these earnings reports today that would really move the market a bunch, but we have to kind of keep that in mind, that there are quite a few earnings out there, and with an emotional market, anything is possible. So kind of keep that in mind. And certainly if you are not checking earnings reports, you really should make a practice out of every earnings report. Check that report and make sure that you're not jumping into something that's just getting ready to report. Have a plan is what I'm saying. Make sure you're checking. Often the market doesn't reward laziness. Take the time. It only takes a few seconds to check. Don't get yourself caught in a bad earnings event and be surprised because you didn't see it coming. Hey, folks, that's about all I have to say today. But what I want to do, ask you is, if this is the first time you've seen this information, please do me a favor and click on that subscribe button on YouTube and the follow me button on Facebook. And also realize, if you're watching this on Facebook, there's a lot of additional free training on the YouTube channel. Please jump over there and subscribe. As I put this information out, and I do put out quite a bit of information on YouTube, it's all available for everyone. So if you're learning, if you're struggling as a trader, please take advantage of that if you find what I do, kind of my method, fits you. So everyone, please feel free to take advantage of that. Also, click those thumbs up buttons if you don't mind. That helps those algorithms a lot. Show my videos to more folks. I do appreciate that. And drop a comment if you feel it's worthy, and always please feel free to share this information with any friends and family that you might find it benefiting. Everyone, I want to wish you a fantastic day and just an awesome Easter weekend. Everyone take care, relax, time to decompress, spend some time with the family. The market will improve. Trust me on that. It will improve eventually. It always does. Let's keep in mind the market normally just wants to go up. We do have periods of shakeout and we do have bear market periods, but overall, you look over history, the market wants to go up and it will eventually turn around. Now, I'm certainly not suggesting it will turn around tomorrow or the next day or even next quarter, but it will turn around and we'll get back to more of a normal trading market where things calm down and better prices will be the great result of this sell-off. We'll be able to get good stocks at a discount rate. So everyone take care, have an awesome weekend, and I will talk to you all very, very soon, bright and early Monday morning. Take care now.